Hey folks, see Rachana Ranade here, and I welcome you all to not a great Thursday live stream. The market has been it's been going down and down and down, and I'm sure a lot of people might be like, not the kind of a start that we had expected during the New Year celebration. I'm sure everyone in different parts of India is celebrating New Year today. In Maharashtra, we call it as Gudi Padwa, and I'm sure that in different parts of India, there are different names for that. And on the New Year, I'm sure everyone would have wanted a way better start to the financial markets. But unfortunately, what we are seeing today is not something that we had expected to see. In fact, last 2-3 days, markets were giving a feeling whether they are just trying to recover a bit, whether they are trying to reach at least some midterm highs, at least trying to reach the previous swing lows. But then today markets have seen a pretty much big U-turn. So today's discussion is extremely important. We are going to try and understand what are the key levels that we have to watch out for, number one. And number two, I have been getting a lot of messages which are more of a panic messages that should we be really even, should we be even still invested in the market, or should we just book losses and just, switch back to FDs, right? So we are going to understand, me and my team, we have pulled up data of 25 years on how has markets performed typically through the year. And I'm sure after watching today's data, you will get some sense of relief. Okay. So first, we will understand the key levels of Nifty, and then we'll start with the key data points. So extremely important discussion. First things first, don't panic. Okay. I'm sure the current market situation is something which will not be so pleasing, but I just thought I should give you a quick heads up. Don't panic. Okay. Number one. Number two, is the market bad today? Yes, it is. Okay. Now, if you even see here, market is down by almost, it has at least regained the 23,000 level. Was 23,200 extremely important? Yes, it was. Had it held on to the 23,200 level? Yes, it had. So if I were to just check Nifty, I'm sorry, I just clicked something. So if you see here, this was the day, which is, one second. So this is the day where we had seen the level. Today something wrong. Okay. Why is this going away? Fair enough, no problem. We'll see it on the top. We can see that the overall closing that we had seen, this was the only day where we saw a closing below 23,200, which was precisely 23,150. After that, we had not seen a closing below 23,200, and today is a day where we are doing a fresh low and a fresh closing, and we may most probably close below 23,000. So is this pleasing? Answer is not at all. Almost 800 points gone on the Nifty. Now, if we are going to close just below 23,000, what is our immediate previous support level, which is 22,800? I believe it is a strong support. I know it's very tricky for me to say, to talk about 22,800 level when we are already at 23,000, 22,900, in fact, something. But still, I do believe that 22,800 is a very strong support. Or if I may give a range, 22,700 to 22,800, that 100-point range. I want everyone to note this down. 22,700 to 22,800. I'm going to tell you why am I saying that. Okay. Now, if you see here, this was the low that we had seen, April 25. What I'm going to do is, I'm just going to quickly draw a Fibonacci joining this low and this high. And you can see that the 71% retracement. I'm just going to delete this line for the time being. And if you see here, the 78.6% retracement, that comes at 22,727. That is why I'm saying 22,700. And if I'm talking about this, let me just show you on screen as well. See, if you see here, there were a lot of instances. For example, this is the gap, 22,800. Typically, we do say that market comes and fills up these gaps. So maybe this is the gap that was pending or has not been filled very properly. So I still believe credit. So this is 22,813, or the previous one that I talked about, 22,700 something. So 22,700, 22,800, I believe should act as strong supports. If something goes wrong, what could be the worst case scenario? The worst case scenario, I don't even want to call out that level, but this is the only level that I can see on screen right now, which is 21,800, 1,000 points down from there. But I don't think we should be going down there right away. Okay. If you have seen my video series WWW, which was War, Waves, and Winners, I'm going to give you the link of War, Waves, Winners in the pinned comment and description box. And in the Waves series, I had told you that typically during Russia-Ukraine war or previous wars also, markets have corrected by 18% from the top. So if I were to calculate, if I were to calculate from this top, 18%. Okay. All right. Buzz. Okay. So this one also comes to 21,600 roughly, and I'm talking about 21,800 as a worst case scenario. Okay, so और कितना खराब होगा? How much more we are yet to see? See, we are already down from the top. We are already there, 13%. Okay, 13% is already gone. Maybe 4 or 5% pain points, and once we see through that phase, ideally we should be able to have a little bit better viewpoint. Okay. D Candle Trader says a huge gap left to be filled in Nifty at 20,250. No, I don't see that level. I'll be very honest. I don't see that level right now, at least. See, we never know what happens few days later. I mean, God forbid, but if few more countries were to join the war and whatnot, if things totally change from what we are seeing right now, we don't know what will happen next. But as of now, whatever information we have, I don't think we should be seeing that level of 2250. On a very, very pessimistic view, I may say 21,800, but that's still extreme pessimism is what I feel. We should not be going to those levels is what I firmly believe. Okay. Now, why is this entire fall? Why did markets panic today? I'm just going to give you quick 4 or 5 reasons. First thing is about tensions in the Middle East. Everyone knows about that. And main point is Middle East tensions lead to increase in oil prices. Oil prices surged past $111 per barrel. Again, if you have been watching my live streams, I have shown you all the key levels, key charts, and at that point in time, if you remember, I was saying that, oh, worst case scenario I can see is 120, and unfortunately we are going closer to that. We have already gone past $111 per barrel. So whenever oil spikes, it is going to have a negative impact on the market. Second, yesterday Fed Reserve chairman very clearly mentioned that the tone that was used was a hawkish tone. See, whenever I say a hawkish tone, it means that they are going to control inflation come what may. Now, if they were to control, so why would that be required? Because with the ongoing war, energy prices or oil prices are going to be driven up, and that is what is already happening. And with that, will the inflation in the economy rise? Answer is yes. If inflation, if overall energy prices, petrol prices, all these keep on increasing, inflation will increase. And to control inflation, to combat inflation, somewhere or the other, interest rates have to be hiked. Okay. Is that going to be a good news for Indian markets? Unfortunately, no, because higher interest rates will somewhere have an impact on higher yields, bond yields. And that is already what we are seeing right now. I'm going to show you all the relevant charts. Okay. That will have a positive impact on yields. It will have a positive impact on the dollar. And all these points are bad for our economy, are bad for the markets. So right now, nothing is going in our favor. I'm sure you have seen the rupee movement. It was, I think it hit a record low of 92.56, whatever. So this is happening. Plus, FIIs are continuing to sell. All these things are leading to more and more of, kind of panic selling is what I can say. So what I'm going to do right now quickly is I will share the screen once again, and I'll show you all the key pointers that I was mentioning right now. So for example, if I'm talking about UK oil, Okay, now I'm going to be a little bit quick because I've told you all the logics. Oh, 116. When I was just going uh, through this entire thing in the morning, you can see here in the morning, I mean, 109 was the low, maybe somewhere around 111. I remember seeing it. And that is the reason why I told you 111, but it's now at 116. God, it is up 6%. See, all these things are going to be very bad. India imports almost 85 to 90% of our oil requirements. And this is a very clear reason why our markets are reacting negatively. See, UK oil is increasing. What will it lead to? Overall inflation plus the hawkish view that US Fed specifically talked about yesterday. So second thing that we check is US 10Y, the treasury bond yield, government bond yield, and you can see it's up 0.28. And in fact, if you can see here, since the last few days, maybe it is an anticipation, but 2nd March 26, from that level to where we are today, it has already risen quite a bit. If I were to just quickly check percentage rise in yields, very clear up move, almost 8% up on the 10-year bond yield. And if I were to talk about USD INR, that is also going to be on, oh god, I said 92 point something. Oh, it's 93.17 right now. All in all, not a great scenario. I'm sure all these things are weighing pretty much heavy on the market. Uh, and all these things coming together, the war situation, the oil prices, the yields, um, dollar improving strength, all these things are weighing pretty much heavily on the market, and markets are not doing good right now. Okay, plus we have our heavyweight champions which were in news for bad reasons, and I'm talking about HDFC Bank. uh, HDFC Bank, the chairman, Atanu Chakraborty, he resigned, citing differences over values and ethics. See, whenever such things come up as a news, please don't consider this that "Arey, something is wrong, kaitri halat aseil." No, of course not. And it's, I think, there was, I mean, HDFC management was in fact having a press conference around 3 p.m. I just started watching it, and this stream, my live stream just blew up. Something happened, but it's good that they are wanting to clarify, just to kill the rumors in the market. That's a good thing. But all first thing that happens is sentiment. The sentiment doesn't go in the right direction, and a big heavyweight champion like HDFC Bank, if that starts to fall, of course, it is going to have a downward pressure on the market, right? So all these things are leading to bad times in the market right now. Pratik is asking, is this a good time to invest a chunk? And Pratik, you are going to answer this question yourself after you have a look at some presentation that me and my team have prepared. So just have a look at this. I'm sure once you all watch this, you will be pretty happy. What we have done is, you can see this nice Google sheet, and we have pulled the data with Google Finance, of course, and you can see from Jan to March. Okay, how has the performance been in the first quarter of the calendar year? Okay, Jan to March, you can see our Jan Nifty price and March Nifty price, and you can see how much has been the percentage return, positive, negative, whatever. So you can see, from in 2025 Jan to March, it has been negative. Here it has been positive, negative, negative, positive, negative 29% was COVID time, positive, negative, whatever, la 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 la. And then you can see here that average Jan to March returns 1.5% minus. And if I'm talking about median Jan to March, see, for those who don't understand the difference between average and median, average will be all values divided by number of observations. Simple. Whatever values we took directly divided by number of observations. But could there be outliers? So for example, today's market fall is like an outlier. Market falling by 800 points, 1000 points, whatever. Ideally, we should be, see, whenever I'm talking about a median will exclude the outliers. And I say, okay, in general, it will move like this. So just to give you a quick example, let's say there are 5 values, okay, and 1, 2, 3, 4, 5. What will be the average? 3. But let's say it is 1, 2, 3, 4 and 100. 100 is an outlier. That will just derail the average. But in the case of median, in case of median, 100 will be ignored and only 1, 2, 3, 4 will be considered. Okay, I hope this example is clear. Outliers ignored in median average includes all the observations. So important averages, let's see what has happened during Jan to March. Markets have given a negative returns of 2.3%. Okay, what about June to, where is April to, okay, April to June, 3% positive. Okay, we were 2.3% negative, and this we have talked about 2000 to 2025 data. We've pulled all the values from Google Finance. We have put it in this Excel sheet. Okay, so for last 25 years, median returns Jan to March minus 2.3%, April to June plus 3%. Now let's have a look at July to September plus 3.86%, and if I'm talking about October to December plus 5.5%. That's a big jump. See, typically, whatever my understanding is, I feel that Jan to March, typically what happens is that there is a budget uncertainty. Generally, people have some, negative biases towards the outcomes of the budget, and there's a profit booking. So typically, Jan to March doesn't have a very good outcome. April to June, things are getting better. There are some observations about the monsoon that will be good, bad, whatever. During July to September, it is actually the monsoon thing gets confirmed. We start to see some Ganpati related sales, some festive sales start kicking in, and by October to December, this quarter is the one where, with the monthly sale numbers of maybe sales and real estate, of auto, of real estate and whatnot, these monthly numbers start kicking in, and it starts pricing in that entire data. So what have we seen? So quick check. What have we seen over past 25 years? Over past 25 years, we have seen that Jan to March has been given a negative return, and all three other quarters have given a positive return. Feels good? Ideally, yes. Okay. Now, we should also understand one more very important point, that one is about historical data. Okay. For again, now, Pratik, do you feel a little bit better now that there is a possibility that maybe this is just one, like whatever we have seen in the past, same thing is happening right now? Maybe this could be a scenario where a little bit more pain is left. I can see the markets recover 23,000. It has regained the 23,000 mark, and how? 23,073. Very nice. If it can close below 23,000, if it can close above 23,000, we'll be very happy, right? Ultimately, there is again one more very important point that I want to share, because markets had fallen with 2-3 reasons. Number one, it was about US-India trade deal, which anyways now stands questioned, with US court only telling that all these tariffs are illegal. So that I don't think, that still remains the question mark. Second thing, because of which we were not rising, is about steep valuations and bad quarterly results. Now, bad quarterly results, hopefully they'll start getting better. Question is about valuations. Where are we right now as far as valuations are concerned? We'll quickly talk about that, something extremely interesting. So let me just pull up screener for you all. And if I were to check Nifty, okay, here we go. Nifty, you can see, I'm going to pull the PE ratio. Just check median PE 22.3. We'll check 10 years data. Median PE 23.4, and current is 20.8. Are we way below the median PE? Yes. What is the scenario for 5 years? Just check this gray dotted line, horizontal gray dotted line. That is a median, and we just have to check, are we below that or not right now? 5 year, we are below median P. 3 year, we are below median P. 1 year, we are way below median P. Okay, Nifty is absolutely below median Ps. So I may say not at all overvalued, in fact undervalued. Okay, what about mid cap? So let's say, Nifty mid cap 100. Let's check this, and we'll go to the P ratio. Here you can see 1 year way below the median P, 3 year below median P, 5 year slightly above the median P. It is 30.7 and median is 30.4, very slightly above median P. Okay, 10 year again below median P, right? What about Nifty small cap? Nifty small cap 250, even if I'm considering. And if I were to check the P ratio, 1 year, way below the median P, 3 year below median P, 5 year below median P, 10 year below median P. So anyone who is getting a little bit confused or is getting a bit scared that, oh God, is this pretty bad, and are we already in a very much overhyped market? We are not. Currently, the overall positioning of the market is something which is fearing everyone. But like we can see right now, it is the valuations at least are not at all steep. We have in fact seen all three, be it Nifty, be it mid cap Nifty, or be it small cap Nifty. We have seen that yes, it is a very interesting point that there's a all three indices are way below their median averages. Now, one more very interesting thing that I read on one of the websites. I'm going to just share this. Here you can see a Nifty small cap 100, and they have given a drawdown. Okay. Now, if you see here, you can see what has happened. Every alternate year, you can see. See, this is very interesting thing I read on this page. So I just thought of sharing this page. Historically, majority of the market bottoms have happened. Market bottoms have occurred during February or March. Drawdowns, that is, drop in Nifty small cap 100 from peak to bottom during Jan to March of 20% or more occurred roughly every alternate year. So you can see this is Nifty small cap 100, 2009, 24%, 2011, 21%, 2013, 21%, 16, not exactly an alternate year, but yes, 24%, 18, 20%, 2020, 47%, 22 is 22%, 23, 11%, okay, and 25 again, 23%, 26 right now they are mentioning -9%. We are lower than that, right? But this is only Jan to March that we are talking about. But check the date of bottom also. See, you can see here March, February, March, and this is 27th March, 24th March, 26th March. Okay, last few days of March, you can see that the date at which small cap 100 has bottomed out, and you check the bounce back within the next fiscal year. Bounce back within next fiscal year is crazy. Even if I were to say with today's fall of more than 2%, if it is like this, could there be a 90% bounce back after things start getting better? It'll be really interesting to watch how the markets may perform, because this is not going to stay forever. We have to understand that things will start getting better at some point in time. Right. Damn scared on certain stocks that we are holding for a long time right now. BSE, Bharti Airtel, Dixon. Dixon is not performing well at all. Bharti Airtel is doing so well. BSE is doing so well. In fact, I can say that BSE is performing way better than the market right now. Just check how much percentage has it fallen from the top till today versus how much Nifty has fallen from the top till today. So, Bharat, if you're holding on to these stocks, fundamentally very strong stocks. In fact, a stock like BSE has got nothing to do with war situation per se. I can understand something like an Indigo or a paint company or a tire company, which has direct impact because of crude oil prices. But something like a BSE or Bharti Airtel, they don't have any correlation directly with the market. So with whatever is happening right now. So I don't think it will really have a bad impact on these stocks. How will the war impact in the near term is the question. I think near term it is just about holding on to the nerves, and that is the reason why I showed you this 25 years data, that from Jan to March markets have not performed well historically because of whatever reasons. Even COVID happened during this time. Even Russia Ukraine war started in February. Okay, so all these things, all these bad things, major corrections have happened in this time frame of Jan to March. Call it a coincidence or whatever, but has happened during Jan to March. So you will have to hold on to your fundamentally strong stocks. If you feel that they are fundamentally weak, then of course you should take a call that then it's not worth holding on to them. Many people keep on asking me that is there a shortcut on how can we decide whether this is a fundamentally strong stock or not, or technically how does this stock look like right now? And exactly for that. I mean, this is the time to upskill. This is the time to upgrade. Many people have asked me for this. My first batch on technical analysis was full, and that was the reason why I announced this second batch within 2 weeks. And I am going to have this webinar, technical analysis using AI, this Sunday, that is on 22nd of March, 11 a.m. to 1 p.m. And you are going to learn a lot. It's about how to create your own technical analysis mentor that can review your own setups. I'm going to show you how to properly code. And very important, you will get the whole Pine script code. I'm going to hand over the entire Pine script code to you. You will learn how to generate buy sell signals directly on TradingView using AI powered Pine scripts. Everything I'm going to teach you. For those who feel that, oh, I don't know how to code, don't worry. Even I don't know how to code, but I've learned it using AI, and exactly that's what I'm going to teach you, all these things. Plus, I'm going to conduct a separate webinar that's a little bit far away in the month of May. But that is going to be on how fundamental analysis can be done extremely fast using AI. I mean, earlier it used to take whatever analysis I used to take for, I mean, one whole day to do an analysis. I'm able to do that in 1 or 2 hours right now. So that's the power of AI. And anyone who is interested in F&O, we are having, all these are second batches, because first batches all were full, and extremely grateful and thankful for all those who believe that it's all about upskilling, it's all about learning new and new things and implementing them in their investing journey. That's how we get better as an investor, we get better as a trader. So anyone who's interested, we are going to share the link of all these webinars in the pinned comment and in the description box. I think you can also see this link. Pooja has already pasted it. Definitely check these links and enroll as soon as possible. Kalyan is asking, any discount? Chalo, theek hai. I will share the discount coupon code. You can use the coupon code CARRYT. Everyone knows this code, but still I'm sharing this code CARRYT. You can use this code, and you can enroll for the webinar, right? One more question. Why markets, gold, silver, all are falling? Exactly, because see, I told you why markets are falling, but if it is about gold and silver, always remember, dollar and gold and silver go in the opposite direction. Right now, dollar is predominantly getting stronger and stronger, and that is the reason why gold and silver are falling. Okay. Typically, investors believe that there will be either or safe havens of investing. Okay. Of course, investors can invest in both, but if they were to choose, and if they choose dollar, then it will be a reverse cycle for gold and silver. Okay. You are looking cool, ma'am. Thank you. Okay. I think this is it. Acha, which stocks to buy in this market? I think, Manish, my course on fundamental analysis will help you shortlist fundamentally strong stocks, and whether this is the right time to buy or not. Technical analysis course will help you, or you can also check the AI webinars for fundamental and technical analysis also, right? I hope everyone has understood, and no need to panic. That is the most important message that I wanted to give in today's live stream. Let us quickly check, because market has closed, and how. Let me just share my screen and show you the closing of the market. Market has closed at 23,002. 23,002. Very nice. Okay, happy. Because when market was around 23,900, I told you that I still firmly believe that 22,700, 22,800 looks like a good support to me. And even I was feeling a bit nervous that market is so close, and I'm saying that this is a pretty strong support. Thankfully, market has closed about 23,000. Happy with at least a round figure upward closing. Let's see 23,700, 23,800. Hopefully, they are held on to. And as I mentioned, remember, Jan to March is a bad phase. Post-April, ideally, achhe din. Could there be some hiccups in between? Answer is yes. Don't panic. Hold on to your fundamentally strong stocks. Do fundamental analysis of all the stocks in your portfolio. Upskill yourself. Improve your investing and trading journey. And that's how you can, overall improve your entire investing and trading game. REC is still fundamentally strong. 100% yes. See, whenever you see any stock correcting madly, first check how much was the up move. if you have been following REC since a long time, the original breakout REC level that I remember is around 180. And from 180, it rallied up to 600 plus. So when a stock moves at such a fast speed, ideally it is going to come down. Number one. Plus REC PFC merger, there is one more point because of which REC is at a hiccup stage right now. But nothing has changed. I had heard some interview and the speaker mentioned that whenever you feel jittery, you have to ask one question: is the story intact? And if you feel that the story of the stock is intact, ideally you should not worry. For example, for REC, it is about the power financing sector. Is power going to be required at more and more level in India? Answer is yes. With AI and with more and more data centers, the demand for power, in fact, is going to ideally keep on going higher and higher. And with that, ideally more power related facilities need to be built, power generation units need to be built, power distribution will have to be enhanced. And for all these things, financial institutions who will fund all these projects will be required. And REC, PFC both, I think, will play a very important role. But because of the sharp rally, it has seen a strong fall. And I hope anyone who feels that it's all over, always I'm repeating the same thing, just ask this question to yourself: is the story intact? If you feel yes, just keep on tracking the quarterly numbers. Khatam. Okay. Yes, Aniket is saying thank you. Yes, understood. Okay, so I think this is it from my side. I just wanted to share my insights on why the market's corrected. Don't panic. Okay, hold on to your fundamentally strong stocks. Upskill. Check out the links in the pinned comment description. Hope to see you at the technical analysis using AI webinar. I can guarantee that you will learn a lot in that webinar. As I mentioned, I'm also going to hand over all the Pine scripts to you. Acha, I'm going to teach you everything that can be used only in free version. Because many people ask me, ma'am, I don't have ChatGPT paid version. I don't have TradingView paid version. It's okay. And whatever I'm going to teach in that webinar, everything is about free versions. Okay, so you can definitely consider enrolling for the webinar. I'll see you in the next one. Stay invested, don't panic. Okay, till then, take care. Jai Hind and bye bye.